were working on it yesterday. A QuickBook can hold more than 10 file. So we want to open a new one. You go to the file and then you say create a new company. Create a new company, you will get this one. You just click express start, and then here is the one where you will just answer these few interview questions, like the name of the company. So maybe we can say these are Opadia consultant. So that is the name of the company, and then to the nature of the company here, we can say accounting and bookkeeping, and then limited liability company. So VAT here, you can charge VAT, but you can enable VAT later. So then you click continue. Here you put the address of the company so that if you want to print an invoice, it will appear. So you make sure that the letterhead, you put all your letterhead here so that it can appear in your book. And then here, you put Kenya for the purpose of currency, and then we create a file. So that is the first step of creating the company file. It's the first step.
Let me remind you also
Yes?
to share this lecture, but I didn't take it from my end. I'm saying
Yes.
I have gotten a laptop.
Yes.
Will you kindly assist me installing the software so that maybe I can follow maybe the procedures when after the session?
Yeah, I will send you the link to download.
Okay,
Yeah.
I'll be grateful. I'll be grateful, sir.
So now after you create the file, so you will realize at the top there, that is the name of the company. This is the outlook of the picture. So the first thing is to know, is this company, if you are working on a company which has already been there, so which means some of the chart of account has been created before, but if you are the one starting the system, then you have to create the charts of account, which we usually go use a list, a chart of account. Then you will find there are other ones which have been created just by default, but like general expenditures, general assets, yeah, but you can't delete them. You can customize them the way you want. Like for tax account, you can say this one is a VAT. You can edit these ones to a VAT. You can say this is a VAT account. Instead of taxes, you can say this is VAT, a control account. Control account, yes. And then we save and close. Now, you can't operate in a company without a bank. So you must have the bank. And bank, you must have the petty cash, the cash, and maybe the M-Pesa if they have. So we will create those three charts of account, which ukienda kwa list, utapata hii list. Down here, there is something which has been written account. So we just click there, and then you click new. So click new, utapata we have categories of ledgers. So we need bank, we select bank, continue, and then you write here, we write bank. So which bank can you use? You can use a prime bank, and then we don't need to put the opening balance. We save a new. Petty cash also is among the group, yeah, bank. We save a new, and I click up chini, save a new. We also have the cash account. We save a new. And then we have M-Pesa, if you tap on that, they have M-Pesa, maybe M-Pesa pay bill, and then to save and close. So we'll find that now we have our bank's account here. Have our bank's account here. So that's how you set the so uh, now so every company they have the employees, and those employees they must be paid salary. So you also need to set the salaries account. Kama wako nazo, then you can set. But if they don't pay salaries, then maybe they know how they use the account. But for a company which has an employees, you have to set up the QuickBook cannot manage payroll. They don't use payroll. Even ukibuy payroll, they use a UK. But now you need to be creative. So we will create a salary account. We will create a salary account and the expense. And then we say salaries and wages. Salaries and wages. And then we save a new. Then we create the statutory deduction, but now as a sub-account of salaries and wages. So we can start with pay, sub-account of um, salaries and wages, save a new, NSSF, sub-account of um, salaries, save a new, meter, but meter is not sub-account. So meter is not part of the salary. Can save that one. What else? We have housing levy, affordable housing levy, salaries and wages. And that, remember NSSF, there is a for company contribution and individual contribution. You can have company contribution. That's enough. So you can now see here, we have salaries. These are the variables of salaries and wages. And then another one is that withholding. So at one point you will find that someone will withhold, or you are the one withholding with some payment. So we need to create an account which we use to monitor this withholding. So utaenda tu bado kwa list, chart of account, and then hapa chini you click e-account, new account. You create a control as a dummy bank. So it fall under bank. So to create kama bank. Hmm, hmm. Continue. Then we will write controls account or VAT, WTH control account. It's not a sub account, but it's a bank. Then don't need to connect. Then now of the VAT account, we need to set up the VAT account. So first, you can you go to the edit preference, and then from preference, you go to down there is FAT. So that FAT is the one which you can enable the VAT. So kuna my preference, but you go to company preference. So they will ask you, do you want to charge the VAT? You say yes. And then it will come here as a tax payable, taxable when bought or sold, yes. And then we click OK. But you will close all the windows. So you realize This was not there before, but once you enable that tab for VAT, then it will pop up here. So you need to click manage VAT if they will appear in the rate. So we don't have the rate here, but earlier on it was here. We were using this way, but we can go to the edit list and then item list. From here can select new item and then VAT. Let's put the VAT item and then we write the VAT name. You can say standard. Rate 16%. Agency sales, tax on sale. Next. So that is or we can even edit this one because we already have it here. Can delete this one and then edit this one and right click, edit this one. You put 16% because that one is for purchases. 16%. Save and close. And then we edit and this one also. Put 16%. Then we save. So we have now the two VAT here, which the account is the VAT control account. They are put 16%. So that is now the setting up chart of account and some of these tax rate. Then so from there, the remaining thing is just raising invoices and bills, because that is the major activities in the QuickBook. You raise invoice. Once you raise the invoice, they will post to the different account. So now, assuming that now Opadia has over the consultancy service, maybe auditing and assurance to another company. So they will over auditing and assurance and they will raise an invoice of maybe 450,000 inclusive of VAT. So 450,000 inclusive of VAT, then we have to get the net. Ningapi. So to raise an invoice, which you go to the, so you can add the items. So now before when we raise an invoice, if you have to add the item, which it is not necessary, for someone who have used a QuickBook for long, they can add item as they raise an invoice. But if you have not used it, then you can still go to the list and then say item list. From there, you can create an item, new item, and then maybe here you can say audit, and then here you can say audit and assurance, audit and assurance, and then you make sure you don't put the rate, it is not necessary. But you make sure you select the correct tax rate here, and then you put the correct account here. So maybe that is accounting service, or you can't. If you want to track specific, you can put auditing income, and then maybe you just raise bookkeeping, filing tax, so that can have different, but we can say accounting service, and then click OK. So that's how you put the service. So you can see you don't have a cost. So if you go now to raise an invoice, then you can raise an invoice direct, which you go to the customers, create invoice here. So once you click create invoice, so assuming we are raising invoice to maybe Nairobi County, NCT, Nairobi City County or NCC. So maybe we have give the audit service to the Nairobi City County, and then on this date, that is the invoice number, you will put here maybe one quantity. The service here is audit and assurance at 450, or we can say here, yeah, 450, the net amount, and then you select your tax here. So 16% of 450, we check whether it is picking the right rate. 16% of 450. Yes, so VAT is 72,000. That is the value of VAT. So you can preview this invoice before even you print to check whether you have so many things. So we find that for the current, for those new system which they have incorporated the e-teams. So we'll find that the e-teams, these are other field here, they will use the e-teams to display those CIUN there. So maybe this one is net after 60 days. And then you can preview the invoice by coming here and say a preview. So if you click OK, you'll be able to see your invoice. That is the invoice. Even though it is in dollars, it is in dollars. So we can change that Kenya shilling to be a default currency. You can see the invoice is in dollars, which if you issue this invoice, the client will be atakuwa shocked. So we can't change the currency. We can enable multi-currency, but we put Kenya shilling as a default currency, which you go to the edit, preference, and then you select multi-currency here, company, and then yes, we need that multi-currency, and then here you can click view more currency. Then let's find Kenya shillings. Here it is. Make it active, yes. And then you are almost to select GP home currency. You are about to select none. Yes, we need that one, and then you click OK. Okay. So they will close. Okay. So once it is done here, you need to go to customers again, and then create invoice. Create invoice. So once you create an invoice here, find audit and assurance, NCC. We were invoicing NCC. That is the invoice number, quantity is just one. And then we have audit and assurance. The net value is 450,000. That is the VAT. Now let's check whether it is in dollars or it is in Kenya shillings. Now it is in Kenya shilling. So that's how you click save. So you make sure that you click save and close. Is it that one? So that is the how to raise an invoice, unless there is a question there. Well, from setting the system up to raising an invoice. Is there any question?
There is no question, sir.
I know, you see, when you watch me like you are watching a TV, it is very easy. But when it comes now, it is now you touching that, you are posting that thing, you will find that where did we go this and this. But once you learn, you will start perfecting it. So now the next thing is that we can enter the bill so that we can make payment and receive payment at once time. So to enter the bills, also it is the same procedure. You just go to the suppliers, and then you can enter the suppliers if you wish, but you can't enter them as you raise a bill. So they are all the same. So why you using double work, going there, putting the suppliers, coming then and then raise the bill, but you can't we can take that long procedure also. So you go to the supplier here, and then you can click here new, add a new customer. So maybe we are purchasing now rent. Yes. So maybe which let's say Telecom is the one is our landlord, and that yeah, so maybe that one is our landlord. So we will come here now and then enter bill, and that is the name. Bill, the invoice number, those invoice number, the big invoice number, the 18 invoice number. Maybe the rent here is 80,000 per quart month, inclusive of VAT. That you will just write your rent and rates, that inclusive, so that is the net amount. So if you put the inclusive value here, or the gross amount, and then you select the rate here, they will be able to determine the tax automatic. They will be able to determine the tax automatic. Then so you can say here, bill to be received. So you can remove this one so that you don't need to. Or you can, yes, you can say bill to be received. And then we save and close. You can see this is the bill. So this is the bill. That is the bill. So already with those two transactions, you can be able to get the full report, the account, the P&L, the balance sheet account, or the agent's account, the VAT report, even to the bank report. So we can be able to get all those reports. So then from now, once we raise the bill, we raise an invoice, and then another step is to receive the payment. I'm taking you through accounting circle. So we can now raise the payment. Now at the point of payment, the client can decide to pay in form of their variety. So you will not select the variety to pay, but it is upon them. They can decide to pay in cash, check, the direct debit transfer. Yeah. So you need to now to set up your QuickBook so that you can be able to know. Once you receive this money, it will go to the specific bank's account. But if you don't set it, it will go to undeposited account as a default account, which it is not. You'll find that cash will go there, which is not good. So you have to set it by going to edit a preference, and then come to payment here, company, and then deactivate this one. Use undeposited fund as a default deposit account. Say no. We can't even, we don't need even to automatically calculate the payment, because you will find that they will apply their any invoice, the first invoice, which the client can pay the second invoice, and they can decide to pay the first invoice later. So these, we can deactivate all these things here, and then we click OK. So they will, okay. Now, so let's receive now the payment in form of cash, checks, direct debit, and also through M-Pesa. So we will come to customers, receive payment. We receive payment from NCC, and then that is the invoice amount inclusive the VAT. So the first batch, which is let's receive 200,000 through a direct debit, which here we don't put the reference number. You will select deposit to make sure it is going to bank, the prime bank. Maybe they did a deposit of date 5. Maybe they did even the prepaid repayment of 200,000. So you backdate that, and then to save a new. So they will say a credit for overpayment will remain on the customer's account. You can't click print. It's not to be saved. Oh, we didn't apply amount here. You have to click this one, and then to apply that 200. That's why that credit note was popping up. So we can save this and close. And then next we receive by cash. Maybe they pay cash over NCC. They pay cash of 50,000. So yeah. we change this one to cash, and then we'll go to the cash account. Cash, they don't have the reference on the date, maybe today. And then we save and close. And save and oh, no, let's click here to put that, and then save and close. Next, they paid through M-Pesa. So answer C, you put through M-Pesa. So here you can put another method of payment by clicking add new. You can say this is M-Pesa. M-Pesa, okay. And then maybe they have paid 22 or yeah, 22,000 through M-Pesa. So you'll put M-Pesa reference here, SGT. At the moment we have at SGT something. And then make sure you are depositing to M-Pesa. You goes to the M-Pesa. So we receive that, click here, receive that, and then save and close. Can save and close. We have to receive one by check, NCC. Maybe they written a check of so 50,000 also. So there is a check of 50,000. So check number, check all is 5. So you put here, check. This one will goes to undeposited fund. Activate that one. Now save and close. So we have received the payment now from all the form of payment. So at that point, you can be, even if you generate the statement, can be able to see the movement of that payment. So you go to customers, create a statement. So you are creating a statement from one customer, NCC. That is the statement. The statement period is from, so maybe from that date to this date, and then you say preview. So you'll be able to see the statement. This is the statement. We created an invoice of 52, and then there was a prepayment of 200,000, and then they pay all these ones. So the due amount now is 200,000. 200,000. So that is all about the account receivable. So if you find that someone is being hired for account receivable, that is his responsibility. So tukimalizana na hapo utapata we have received cash. Also, we have received checks, which at one point, this cash and check has to be taken to the bank for banking. So we have to do a transfer for cash, and we have to do a deposit for check. So you will come to banking and then do a transfer from cash account to bank, prime bank. You can transfer the whole amount, 50,000, and then save and close. So we have transfer now from cash account to the bank. And then also bank deposit, you go to the banking, make a deposit. So we are making a deposit of this amount with that check to the bank. So here, you don't need that payment method. You click OK here, and then make sure here you are depositing to the bank, and then click save and close. So now if you go to the report for cash account, you will find that we don't have the cash here. So if you go to the list chart of account, right click this and go to the quick report. find that we receive 50 and then we transfer 50. So we are running at 0. We are running at 0. So that is now how to raise the invoice and receive the payment, all that. So is there any question up to that point?